Well, hey, everybody. Welcome to the webinar. This is a topic, stock versus mutual whole life insurance companies. Barry, who's joined me as well. Barry Brooksby is a mutual whole life expert and is going to join me to talk about stock versus mutual whole life insurance companies. Let's jump right in. Barry, thanks for joining us.
Thank you.
All right. So our goal today is just to highlight some differences for you guys listening, rights and features of mutual whole life versus stock life insurance. Very interesting for many of you maybe to think about the difference because we're all familiar with stock companies and companies that are beholden to their shareholders. Today we want to talk about and distinguish mutual life insurance companies because there are some unique aspects to mutual companies and the advantages. And we also want you to learn about the different operating approaches of stock versus mutual life insurance companies, kind of part of talking about the benefits. And then we'll talk a little bit about, touch on some policy design options that are unique about mutual companies. This sort of relates to something we talk a lot about, which is the infinite banking concept. And mutual companies are particularly related to infinite banking and these kinds of things. And then we do talk about how we've ranked our top 10. A lot of people get interested in our top companies. So we talk a little bit about how we choose mutuals and our top stock companies, why we've chosen them. So with that, let's dive in, Barry.
We have stock versus mutual life insurance companies by definition. Mutual life insurance companies, also known as mutuals, have no shareholders. The policy owners are members of the corporation controlling the insurer, and this grants them membership rights. Whereas stock life insurance companies are beholden to shareholders like any other corporation and not policyholder members.
Right. So huge, right? I mean, for people listening, we've got a completely different model. Hopefully you guys will be starting to see this as opposed to a company that's really looking at how to please the shareholders. Mutual companies, how to please the policyholders, which is a huge difference.
Yeah, and when you think about profits of a company, right, companies are in business to make money. As a mutual policy holder, we get those profits coming back to us, which we'll go through here in the next slide.
There you go. So yeah, just as far as policyholders' rights, contractual benefits, you're really more of a participant in the company. In fact, Barry, what's your understanding when a mutual company pays dividends? What really is that?
Yeah, it's a return of premium. So we're getting those extra premium dollars back to us in the form of a dividend. The company looks at their costs, life expectancy, what death benefits did they pay out, what did it cost to overall run the company. But those profits come back to us, whereas in a stock company, those profits go to stockholders who don't necessarily have to have a policy with that particular company.
Yeah, and that's really cool. We're not getting into the issue of tax advantages yet, but that is why we have some tax advantages.
Yeah, one of the greatest things about a mutual life insurance policy is the tax deferred and most of the time tax-free use of money. So when those dividends are reinvested back into cash value, you can actually take that dividend or those profits or that cash value growth in the form of a loan tax-free. Whereas if you have a stock and you're earning a dividend from the stock, we know that those dividends are taxable.
Awesome. So, and you guys can read the other policyholders' rights. All of these things point to the fact that a policyholder is really a participant in the company. This is why sometimes you guys will hear participating mutual whole life policy. If you ever hear that, it kind of relates to all of these aspects of the policyholder's rights. Stock companies are what you might think. Anything that you want to highlight, Barry, about stock companies?
On this particular slide, we just want to reemphasize that these companies here at the bottom are managed for the benefit of their shareholders.
Yep.
Right?
Yep.
Not the policyholders.
All right. So the differences in operating approaches with a mutual company, the main thing we wanted to point out is that the mutual companies have a record of being more apt to consider the long-term health of the business and the integrity of the company rather than just simply trying to get a higher stock price. Stock companies are always looking at the bottom line in terms of stock price for investors.
Yeah, that's right, Steve. How can they appease the investor on a quarterly return basis?
There you
Whereas a
go.
mutual company, their strategy, like you say here in the slide, is long term. They're in it for the policy holders, which means they're usually making more conservative investment decisions. For a quick overview, look at this side-by-side list, mutuals compared to a stock publicly traded company.
There are some awesome design options that people that are just starting to understand mutual companies, and if you heard anything about infinite banking or cash value life insurance, that these are something that we like to tell people about. And really, we talked about participation already. We talked about dividends. Tax advantages have to do with the dividends being a return of premium. And then along with these advantages, you have things like collateral and leverage and liquidity. And there's a lot of exciting things that we have featured in a lot of other webinars that you guys can find at InsuranceandEstates.com.
Stephen, I'll just wrap up this particular slide by saying these are exciting benefits for mutual life insurance policies. When you consider getting all of these benefits and even more that we haven't listed in one product, the only place to find it is in a whole life high cash value policy. Look, I've been in the industry 20 years. There's nowhere else out there in the investment world where you can get so many benefits in one place. One of the things that's not on here is guaranteed growth. That these policy cash values are growing guaranteed every year on a compound growth curve. The policyholder never has to worry about losing money. And then not only can they use that money throughout their life as their own bank, but then they get into retirement and now they have this tax-free bucket of money that they can use as retirement income, which we talk about here in number 4, tax-free use of money. So the benefits do go on and on and on. One product, multiple benefits where your dollars are doing multiple things at the same time.
Awesome. So when we went through and we compiled top companies, we really do this as just a way to help people get to know the companies that are out there. We put them on the website. We do have a small list of companies we actually determined to be the best for our clients at this point. And Barry works directly every day, really, with these companies. When we put these lists together, we're just saying that you want to find a great company to work with. We're particularly good at finding the best in terms of the best return for the person, best features, and these kind of things. So when we make our top 10, we're certainly not making a recommendation. We're really just letting you guys know who these companies are. And then ideally you work with, somebody here or work with an expert that understands how to design a policy with a company that maximizes the benefits for you.
Yep. These policies are very individual. And we want to make sure that we're not making blanket statements, but we are designing specific to a person's goals, their wants, their desires, and we really get fine-tuned with those designs.
And a lot of it's really designing the right policy with the right company.
That's right.
So hopefully that gives you a little introduction to the mutual versus the stock company. Obviously, you can tell we favor mutuals for a lot of the reasons, really, particularly because we work with folks that are policyholders, and we're policyholders ourselves. So if you detect a little preference there, you're reading that right. Of course, there may be a time and a place for a stock company on occasion. Anyway, we want you to have that information. Take a look at the other webinars as they're diving more deeply into some of these concepts regarding mutual companies and the advantages. You can click the questionnaire link, fill that out if you'd like to have some in-depth discussion with Barry on any of these topics. We appreciate it. Thanks for joining us.